Hey, what's up guys? Hope you all are doing good. I'm doing well. Today in this video, we're going to talk about the top 3 leveraged ETFs for options trading in 2025. Then we will explore the top 3 leveraged ETFs that I'm going to show you in my portfolio as well. And also we'll understand their performance, volatility, and how to utilize them for maximum profit. So before jumping into the video, what makes me qualify to make a video on leverage ETF is because I have a portfolio of over $186,000, and some of that money is invested in the leverage ETFs that you see here. And I'm a true believer in leverage ETFs for swing trades. And I also hold these leverage ETFs in my Roth IRA account as well. So if you're interested in learning more about the top 3 leverage ETFs of my list, let's jump right into this video. So first, I wanted to show you guys the top 3 leverage ETFs ideal for options trading. So in options trading, we are selling cash secured puts and covered calls mainly for the stocks and ETFs that we hold. So in this case, if you see here, this is one example of the top 3 leverage ETFs. So the first one is SOXL, Daily Semiconductor Bull ETF. The other two ETFs that I think are really good or top ETF, one is ProShares Ultra Pro QQQ or TQQ for the ticker symbol. And it is again 3 times leverage exposure to a modified market cap weighted index tracking 100 largest non-financial firms listed on NASDAQ, meaning 3 times leveraged of QQQ. And then lastly, another one that I have in my portfolio is Daily S&P 500 Bull 3 times share, ticker symbol SPXL. And then this ticker symbol also has the leverage of 3 times the share. And this is for S&P 500. So basically, this is 3 times of S&P 500. TQQ is 3 times of NASDAQ 100. And my favorite, SOXL, is 3 times the leverage of 30 top semiconductor companies. So basically, these are my top 3 picks, and I hold all of them in my portfolio, some here and some in my Roth IRA as well. So now let's talk about the performance of these leverage ETFs. The performance of these leverage ETFs is all calculated daily. So if SPY or the index of S&P 500 moves up 1 point, SPXL would move 3 points. And same goes for the downturn. Say for example, if S&P 500 goes down 1 point, SPXL would go down 3 points. So it is kind of like margin where it amplifies gains as well as the losses. But over the long term, if we are looking at SPY, over the long term, it doesn't hold true. Over the long term, S&P 500, ticker symbol SPY, for 1 year chart, it has performed 25.57%. So if we calculate that, so if we say 25.57% is the return of S&P 500 over the past 1 year, so SPXL's return should have been 76.71%, but that would not be the case. And to show you that, let me go back to SPXL. You see here, a 1 year return for SPXL or 3 times S&P 500 leverage ETF return is 71.25%. So what I'm trying to make a point here is if a stock goes from $100 to $110, it has gained 10%. So the SPXL in such case would gain $30, right? So now the price of SPXL would be $130. But consider this, if SPY drops $10, meaning in our example, if SPY drops from $100 to $90, then SPXL will also drop 10% times 3, meaning $30 for that day. So it'll drop to 70% or $70. Now, in order to go from $70 to $100, it would not need 30%. It would need more than 30%. And that is why people who have been in the industry for long time, they try to avoid these leverage ETFs, meaning the impact of these going down is far outweighs the benefits or the profits or the rewards that you're gonna get gaining 3 times the benefit, because now from 90 to 100, S&P 500 would need little over 10%, whereas from 70 to 100, SPXL would need over 12%, if that makes sense. And that is all the calculation you need to do if you are willing to spend money on leverage ETFs. So that is how the performance has been affected. Now, the volatility, as I showed you guys, it is very volatile, and that is what I take the advantage of. I play with SOXL. I sell cash secured puts. If you see here, I also own 100 shares. I have 100 shares of SOXL at average price of $29.77, and I'm selling covered calls every single month. So my next covered call is expiring on February 7th at $33.50 strike price, whereas I'm also selling cash secured puts, which is weekly, and I'm selling 8 contracts here, each at $27 strike price, and I collected some $64 or something like that. Yeah, $64. So 56 and 8, $64 were credited to me for this. And that is how I've been playing SOXL options, meaning I sell cash secured puts deep out of the money. And if these deep out of the money do get exercise, I hold them and I sell covered calls and still make money while holding these leverage ETFs. Now, this SOXL could go down to $20 in no time, meaning it would not take a long time for SOXL to go down to $20 since it's 3 times leverage. But then again, I'm also selling covered calls, so I'm gonna average down with my investment as well. And again, all the investments come with risks, so you have to consider all of that. Lastly, let's talk about how to utilize them for maximum profit. The easiest and fastest and the best route to use leverage ETFs is to do swing trade. What what is a swing trade is if you were to be assigned these shares of leverage ETF, you right away sell a covered call. So I do not buy SOXL or SPXL or even TQQQ, any of these top tiered leverage ETFs at the price. I buy them for cheap, and how I buy them is through cash secured puts. Once it gets exercised or the price of this ETF goes down below my strike price, which is in this case $27. If the strike price goes below $27, then the shares will be assigned to me at $27. What I'll do is I'll come here right away, start selling covered calls. Basically, a wheel strategy if you know options trading well. And then if, say, for example, I were assigned at $30, all these 8 contracts, I would do this, and then I would be able to make $672 just within 2 days. And that's the beauty of selling cash secured puts and covered calls on this leverage ETF, because the premiums are super high. And that is how I've been using these leverage ETF to grow my account. If you see here, this leverage ETF, SOXL, is nothing new to me. I've been trading this for quite a while now. Every single week, if not week, every single month, I have traded that. Even on the vacation that I was not at home, I traded SOXL over the month expiration date, and I was able to collect premium for that. And that is how you should be doing as well. I think that should do for this video. I hope you guys will like this video. I'll make another video if you guys have any questions related to this. And thank you guys for watching. I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.